Good evening everyone, welcome to the official YouTube channel of Officer Study 24/7. So first of all, let me know how are you all, and also let me know is audio video both are okay, are we good to go? So how's your preparation is going on, because we know examination dates, registration dates are already out, and it's today 28th of February, and from 5th of March your registration is going to start. So it's very important for us now that we be very serious regarding our preparation, and for that you have to start with the conceptual study of your each and every subject. After conceptual study you have to revise the content, and then you have to give the topic wise mock test as well as the full length mock test. So these are the 3 to 4 points that you have to remember while you are starting preparation for your JAIIB May 2024. Okay, so let's start today's session. Those candidates who are here for the first time, I would love to inform you all that on this channel you will find all the JAIIB, CIB, bank promotion exam related queries solution or answer of all of your queries, and this is the session which is mainly for your JAIIB, IE, IFS subject, in which we have started the victory series, and in victory series we will be discussing advanced questions related to each and every unit of your IE, IFS. So in IE, IFS we have 45 units. Okay, we have 4 modules and 45 units are there. So these 45 units we have to cover one by one. Okay, and we have sufficient time to practice the questions every day on each and every unit. So what we are doing here, I have started the module D in the series. So first I will be discussing module D advanced question, then we will move to C, A and B. Okay, as per the weightage of your syllabus, the sequence of module will be continued like D, C, A and B. Clear? Now in module D we have already started this session. This is your victory series, that's the class number 4. It means in Indian economy, Indian financial system, module D, that is your financial product and services. We have discussed financial market, money market, capital market and stock exchange, and today we will be discussing the fixed income market, that is the 4th unit of module D. Okay, so you can simply see 1, 2, 3, the starting 3 units of your module D have been completed, and today we are going to complete the unit 4th of your module D. And if we talk about overall, it is your unit number 32. So it talks about your fixed income market. It talks about what? It talks about the fixed income market. Now what is fixed income market, debt and bond markets are? So as the name suggests, it's a fixed income market. It means if any company is raising funds from you, then the company will actually going to pay you back that money with the fixed rate of interest, and that is your debt or bond market. Okay, so if you remember, we have discussed in the capital market. The capital market includes both. So first the equity market, second the debt market. So equity market is a share market. Equity market is what? It is a share market, and the debt market is the market in which the company will be raising money from the market by issuing bonds or debentures. Okay, and on that, after a fixed period of time, a fixed rate of interest will be paid by the company. That's what your fixed income market actually is. Okay, that's what your fixed income market is. So now when it comes to the fixed income market, we have fixed maturity period as well as fixed rate that will be decided before issuing the security or before issuing the instrument or financial product. Clear? So this is the basic fixed income market we have to discuss today. So let's start the discussion in form of MCQ, and the first question is talking about intercorporate deposit. So the question we have is in the form of filling the blanks, in which we have to discuss intercorporate deposit. Okay, so first of all, if we talk about fixed income market, it will cover all those instruments or all those financial products which are not giving you the ownership or partnership. They are just taking money from you, and after a certain period of time they have to return back your money with a certain rate of interest which have been defined before introducing or before launching that kind of instruments. Okay, do remember this. So if there is an intercorporate debts, or we can say deposits, these are the part of your fixed income market. It means here also the maturity and etc. will be decided earlier. So ICD is an dash borrowing. Okay, So now if you want to use the elimination method, you have to know here what is the right answer of this blank. So we are saying that intercorporate deposit is an dash borrowing. So is it a secured borrowing or unsecured borrowing or a check borrowing? So it is not a check borrowing. It is not a such kind of term here that is a check borrowing. ICD can be secured or unsecured. Now when it comes to the ICD, it is issued by the corporates for the another corporates. It means corporates are giving loan to each other in this particular intercorporate deposit. And when the corporates comes into the picture, it always become what? Unsecured instrument. It always becomes the unsecured instrument. It means simply your intercorporate deposit is an unsecured instrument, or we can say it is an unsecured borrowing. By whom? By the corporates and financial institution. From whom? From other corporate entities which are registered under Companies Act 1956 or 2013. Clear? So this is very much clear that because the corporates are involved, it is the unsecured borrowing. Okay, it is what? It is unsecured borrowing. Now the next thing we have here, if there will not be a none of the above option, we can easily answer that A is the right option, but it is none of the above have been given, so we have to read the whole statements here. So second statement is talking about the short-term credit rating of the corporate would determine the rate at which the corporate would be able to borrow funds, and the tenure of ICD may range from 1 day to 1 year. Okay, and but the most common tenure that will be used is 90 days, and the primary dealers only permitted to borrow in the ICD market. Clear? They can borrow, they cannot lend. Next, the borrowing under ICD is restricted to dash of the net owned fund. What percentage of net owned fund is allowed in the intercorporate deposit to be borrowed? And answer is actually 150%. 150% of the net owned fund can be borrowed by the ICD document. And the next is talking about the minimum tenure of borrowing is dash. For how many days you can borrow, that's the minimum duration, and it is 7 days. So your right answer will be A. Okay, your right answer will be what? It will be A, that simply a party can participate in the ICD instrument where the corporates are giving loan to each other for the period of 1 to 90, for 1 year, up to 1 year, and the maximum use tenure is your 90 days. Apart from that, the minimum tenure for borrowing 150% of net owned fund will be your 7 days. Okay, so the right answer will be what? It will be A. Your right answer is A option. So when there is none of the above is given and in one of the option, you have to cross check all the options. You have to read all the statement and all the filling the blanks here to answer the question. Okay, next, second question is talking about the RDS scheme. So what is RDS? It is a scheme, retail direct scheme, that was introduced by Reserve Bank of India for the retail investors. Okay, so question is saying, in order to deepen the government security market and enable the retail individual investor to participate in the process of nation building by giving them access to the government security market, RBI introduced the retail direct scheme. Which of the following is our correct statement? So what we're talking about here, RBI had introduced the retail direct scheme. In the retail direct scheme, we can simply say that why this scheme was introduced, because RBI wanted that more and more people will participate in the government securities trading. Why? Because when you give funds in the government securities or when you purchase government security, you are giving your money to the government, and that money will be utilized by Government of India for the development of the country, and that's what actually the retail direct scheme is doing. So in the retail direct scheme, retail individuals like us, we can easily participate in the government security trading, so we can become the participant of nation building. Okay, so you have to answer now, out of all these statements, which statement is correct about the scheme. So first statement is talking about retail investors, they can buy and sell the treasury bills, dated government security, sovereign gold bonds, state development loans. Second is saying the RDG account can be opened singly or jointly with another retail investor who meets the eligibility criteria. Third is saying RBI launched the retail direct scheme on 12th of November 2021. Now you have to answer out of these three statements that have been given in front of you, which of the following are correct one? A, B, C or D? Only one, only three, only one and three, all of the above. A, B, C or D? So let me know which of the following will be correct here, A, B, C or D. Okay, and the right answer will be all the statements are correct about retail direct scheme. You can use any, you can transact in any government securities here. Okay, and you can also have a retail direct gilt account by you can hold it single or you can hold it with the joint accounts. And also it was introduced on 12th of November 2021 by RBI. All the statements are correct. So do remember, retail direct scheme is one of the very important topic of your IE IFS. One question definitely can be seen here. Okay, so right answer is D. All the statement was right about the retail direct scheme. Now next we have which of the following is are correct about FIMMDA. Now what does FIMMDA stands for? It is Fixed Income Money Market and Derivative Association of India. Again remember, all the abbreviations are very important for us. Might be there is no chances, there is very less chances I can say that they will directly ask what does FIMMDA stands for. They cannot, there is a very less chances of asking the direct question on the abbreviations or full forms. But yes, there is a chances in the statement regarding that particular abbreviation. One of the statement in the question will be talking about the full form of that abbreviation. So that's why we have to remember the full form as well. So here it is saying that which of the following are correct about the role of FIMMDA. First is saying to diverse standardized best market practices. Second, to function as an arbitrator for dispute, if any, between member institution. Third, to develop a standardized set of documents. Fourth, to assume any other relevant role facilitating smooth and orderly functioning of the said market. So now you have to answer which of the following is correct here. Which of the following is correct here? A, B, C or D? Okay. So fixed income market, fixed income money market and derivative association of India is simply a association that was created first to diverse the standardized best practices for the market. For which market? For the fixed income market. That can be a money market and derivative market. Second, it also functions as an arbitrator for the dispute if it happens between the members. Third, to develop the standard set of documentation. And the fourth, to assume any other relevant role that facilitates the smooth and orderly functioning of the said market. It means all the statements that have been given here or all the working that have been given here about FIMMDA is correct. Okay, it actually helps to make the best practices for the fixed income money market and the derivative market. Okay, so the right answer will be your all of the above, that is D option. All are the role of FIMMDA. Okay, I guess clear. Now the next question we are talking about here. Okay, which of the following are correct about the role and function of primary dealers? So I guess primary dealers we have discussed a lot of number of times. Primary discuss is obviously an important topic and we have also discussed it a lot, a number of times. So first of all, primary dealers were introduced by Reserve Bank of India in 1995 to make sure that RBI will have another party or another participant to help RBI in the selling purchasing of government security. So we know RBI works as an agent for Government of India, and that purpose RBI needs someone to work with RBI for the selling purchasing of government security. So that's where RBI introduced the primary dealer. Okay, so now you have to answer which of the following is correct. First is saying to commit participation as principals in Government of India issues through bidding in auction. Second, to provide underwriting services. Third, to offer firm buy, sell, bid, ask quotes for treasury bills and dated security. And the fourth, for development of secondary debt market. And out of these four statements, you have to answer which of the following is correct. A, B, C or D. A, B, C or D. Which of the following is correct? Okay. So the right answer here will be, okay, now. So when it comes to the role of your primary dealers, it helps RBI for the selling, purchasing of government security in the bidding auction process. It provides underwriting services. It also offers firm buy, sell and bid ask quotes for treasury bills and dated government security. These are government securities. And also it do make sure that the development of financial debt market will be done, because primary dealers are allowed by RBI, they can participate in the secondary debt market also. Okay, so the right answer is all of the above are the right statements about your role and functions of primary dealers. So all these statements, all the four statements are talking about the role and functions of the primary dealers. That's why right answer will be C, all of the above. Okay. Next question we have that is talking about which among the following are correct regarding eligibility condition for the primary dealer. Like if you want to become primary dealer, you have to take a license from Reserve Bank of India. RBI will give you the license and then only you can work as a primary dealer in the country. But to take license from Reserve Bank of India, what eligibility criteria you have to fulfill? So first is saying you can be subsidiary of any scheduled commercial bank or all India financial institution. Second, you can be subsidiary or joint venture that is set up in India, but it is of foreign company. So foreign company, subsidiary or joint venture is working in India. Okay, that can also become primary dealer. Third, the company which is incorporated under the Companies Act and does not belongs to the category or the statement 1 and 2. These are the three statements written in front of you about the eligibility condition to become primary dealer in the country. So what do you think, which of the following is correct? A, B, C or D? A, B, C or D? Okay, so the right answer here is actually all of the above. All the statements are correct here regarding the eligibility condition of primary dealers. Okay, so right answer will be your all of the above. Next, right answer is D. Okay, next we have what the next question is talking about. What is RBI retail direct scheme? So what actually the retail direct scheme, that you have to answer. Now when you see this question 9 paper, you will feel like that it's a very tough question, because when you see this question, it seems like a very lengthy question and very tough, but it is very simple to attempt. Just use the elimination method. So we are talking about RBI retail direct scheme, and I have told you this scheme was introduced by RBI so that the retail investors can participate maximum in the trading of government security, and government will get money to develop the economy. And we wanted to simply, in other language we can say, we want the retail investors to become the part of nation building. That's why we have, or RBI have introduced this scheme. So first is saying, in order to deepen the government security market and enable retail individual investors to participate in the process of nation building by giving them access to the government security market, RBI launched retail direct scheme on 12th of November 2021. So I guess everything written here is correct. Okay, everything written here is correct in this first option. So can we say that this is the right answer? Actually, this is the right answer, but now I will tell you how you can eliminate the other options very quickly. So I am checking here that the year is talking about 2020. Here the date is about 14th of November, and here the year is 2020. And in the earlier question we have discussed this date. The date was written in the earlier question. 12th of November 2021 was the day when RBI launched the retail direct scheme. So because of the years, You do not even have to read the whole statements. You can check the years, you can check the date, and you can eliminate the other 3 statements. So the right answer will be your what? It will be A. Okay, right answer will be your A option. So I guess it's easy to discuss. Acha, but if there is no difference between the date, but they have changed the definition, then obviously you have to study all the 4 statements. Sorry. Okay, next question we have here. Under the eligibility of investors of retail direct scheme, the retail investor as defined under the scheme can register under scheme and maintain a RDG account if they have the following. Okay, like if RBI have introduced a retail direct scheme, you can do what? You can invest there because you are individual retail individual or retail investor you can invest in the scheme. But we are talking about the eligibility of investor of RDS. If they want to become the participant in the RDS scheme, they have to have the retail direct gilt account, that is RDG account. Where it is? Here it is. That's the RDG account. If you want to invest, you have to have a retail direct gilt account, and to have retail direct gilt account, the certain documentation or certain criteria you have to follow. And those written here, the first is saying that you should have a rupee savings bank account maintained in India. Second is saying you should have a permanent account number that have been issued by the income tax department. Third is saying any official valid document for KYC you have to give. Fourth is saying your valid email ID should be given. And fifth is saying registered mobile number should be given. Okay, so these are the 5 things have been written in front of you. Out of these, what are the requirement to become the investor under the retail direct scheme so that you will be allowed to have a RDG account? Let me know. Out of these 5 requirements, which of the following will definitely have to be there? A, B, C or D? And the right answer here will be all are correct. All the statements are correct. You need to have all these things to have the RDG account to invest in the retail direct scheme. Okay, so all will be correct here, all will be the answer. It means A option. Acha, now I have one question from all of you that you have to answer in the comment section. Like in case of official valid document, we have 6 documents. There are 6 official valid documents. Out of the 6, PAN card is not an official valid document. Okay, it have been removed from the PAN card, have been removed from the official valid document. So now you have to give me the names of your official valid document in the comment section. Hana, you have to let me know like what are the 6 official valid documents are there that have been announced by RBI for the purpose of opening account of any person. Okay, any person or corporate or entity, anything. So right answer is here. First, second, third, fourth, fifth, all are correct. Clear? Next question. Next question we have here that filling the blanks in relation to the concept of intercorporate deposit. Okay, it is a filling the blanks. They are asking about again the filling the blanks. So ICD is what? It is unsecured, we know. So you can easily eliminate the second option because it is not secure, it is unsecured. You can eliminate the second option. Now next is saying here that this lending would be on dash basis. So in the intercorporate deposit, corporates are giving loan to each other. That is what? That's an unsecured loan. So this loan will be collateralized or uncollateralized? Because I am saying that this is unsecured. If it is unsecured, definitely it is what? It is uncollateralized. So you can eliminate the last options that this is saying it's a collateralized. You can eliminate this. Now the next thing is they are asking that the short-term credit rating of the corporate would determine the rate at which the corporate would be able to dash fund. To borrow fund or to lend fund? Obviously to borrow fund. So you can see here it is saying borrow fund. Okay, in the last statement also it is saying borrow funds. And now next statement is saying the tenure of ICD may range from 1 day to 1 year, but the most common tenure of borrowing is for what? For 90 days. That we have discussed in the earlier question also. So what happened? Option number A and option number D both are same. So ye both are right. Hana, in the option A and D, I have given the same options in both the options. So that's why A and D both you can say is correct because they are defining the right Good evening, everyone. Welcome to the official YouTube channel of Office Study 24/7. So first of all, let me know how are you all. Also, let me know is audio, video both are okay. Are we good to go? So as you know, we have started this victory series on YouTube in which we are discussing advanced questions regarding your IE IFS subject. So this is our class number 2 related to your victory series. Okay. So if you remember in the last session, or I can say the first session of your victory series, we have discussed about your module D. We have started from the module D. So you can see module D, unit number 29, we have already discussed. That was your financial market. So we have completed the financial market session, and today we are going to discuss in the module D of your IE IFS, the unit 30, that is money market. So the second class of your is all about unit number 30 of your IE IFS module number D, that what we are going to discuss today. Okay. So let's start. If we talk about money market, what actually the money market is. So money market is a market, first of all, which is regulated by Reserve Bank of India. This market is regulated by whom? This is regulated by Reserve Bank of India. It's a short-term market. Why we are calling it a short-term market? Because it is for less than 1 year. For less than 1 year. This is the period which, this is a market which have a maturity period of 364 days only, not more than that. The maximum, or I can say the maturity period of this market will be what? 364 days. It means it is for less than 1 year duration, regulated by RBI. It's a short-term market. If I talk about money market, it helps persons who are with the deficit of money. It can be a person, it can be a company, corporate, government, whatever the participant is. If they need a capital, they need to raise a capital for short-term period of time, that is less than one year. So they can come to the money market and raise capital from there. Why? Because this market offers them to raise capital with using the platform of money market, which is regulated by RBI. So we use here the short-term financial assets, which are close substitute of money. Now, what does this mean? It means those assets we are using here, which can be easily converted to cash. For example, call money, notice money, term money, certificate of deposit, commercial paper, treasury bills, repos, tri-party repo, etc. All these are the instruments of your money market, which are short-term financial assets, and they all are close substitute of money. It means you can easily convert any of them in cash. Okay, and that will be also done by very less costing. It means at a less cost you can convert these instruments into cash. That's what the money market is talking about. And when you are going to do the detailed study of this chapter, you will find each and every instrument of money market you have to read in a very depth. This is very much important. Okay. So this is all about your money market chapter introduction. Acha, apart from that, I also want to inform you guys regarding your new batch. That's the AIM batch. In AIM batch, so first of all, this is the comprehensive batch for JAIIB May 2024 preparation. This is starting from today, that is 26th of February. In this batch, we are going to start 2 subjects here, that is PPB and retail banking and wealth management. These 2 subjects are starting today. So first of all, PPB is starting at 7 to 8 p.m. and your retail banking is started at 6 to 7 a.m. So these are the 2 timing of these 2 subjects. And IE IFS will be started in the next coming week. So these are the 2 subjects starting today. And because the batch started today, that's why right now maximum discount is going on 81% if you use the code Y496 and purchase the batch from Adda 24/7 application. Okay. So this is the code. This is the batch. You can enroll by using the code Y496. Okay. Now let's move forward and discuss the questions regarding the money market chapter. So as I have told you, or if you have attended the first session of Victory series, you have seen by yourself that whatever segments of financial market was there in the chapter, from each segment I have created question for you. And the same thing I am going to do in every chapter. So now in money market, the first instrument we are talking about is treasury bills, that is T-bills. So first of all, T-bills are issued, but you have to answer. So let me know which of the following is correct here. Read all the statements. Okay, read all the statements. Then let me know which of the following is correct. Days, 364 days treasury bill through a competitive or non-competitive bidding process of auction. Okay, this was the first statement. Second statement is talking about the investment in the bills may be made by any person resident in India, including the state governments, firms, companies, corporate bodies, institution, trust, retail investor. So who can be the investor in the treasury bill? Any of them. The person, the company, the entity, the firm, the government who is in India, who is resident in India, they can purchase the treasury bill. Second thing is that third statement is saying that non-resident Indians, overseas citizen of India, foreign portfolio investor, they are also eligible to invest in the treasury bills, but what is required for them? They have to go through the approval of government and provision of Foreign Exchange Management Act. So these are the three statements in front of you have been given. Out of these three, let me know which of the following is correct. A, B, C or D. Which of the following is correct here? So the right answer will be all of the above. The right answer will be what? It is all of the above. Okay, this is your right answer. Because all the statements regarding treasury bills are correct here. Now, the second question is talking about the second instrument of money market, that is certificate of deposit, and question is asking which of the following statement are correct about the certificate of deposit. Okay, so first is saying certificate of deposit is a negotiable money market instrument that is issued in dematerialized form by scheduled commercial bank and select all India financial institution that have been permitted by RBI to raise short-term resources. So this is the first statement. Second is saying while the tenure of issue can range from 7 days to 1 year, most certificate of deposits are issued by banks for 3 months, 6 months and 12 months tenure. Okay. Third is saying certificate of deposit can be issued to individual other than minors, corporations, companies, trust, fund, association, etc. Fourth is saying NRIs are also permitted to subscribe the certificate of deposit. And the fifth is saying minimum amount of certificate of deposit is 5 lakh. And out of all these statements, you have to answer which statement is correct. Out of all these statements, which statement is correct? And the right answer will be all are correct. All the statements are correct about certificate of deposit. So certificate of deposit is a secured instrument. Why it's a secured instrument? Because it is issued by the banks and financial institutions. That's why it is known as a secured instrument. Okay. So simply your certificate of deposit is a secured instrument. It is issued for 7 days and 364 days. Maximum use duration will be, maximum use maturities were 3 months, 6 months and 12 months. Minimum amount is 5 lakh and thereafter multiple of 5 lakhs are allowed. And NRIs can also participate or also invest in the CDs. So right answer will be your D. All of the above are correct about certificate of deposit. Now, next. A tri-party repo is a type of repo contract where the third entity, apart from the borrower and lender, called a dash. So the third instrument we are talking about here of money market is a tri-party repo. So it is saying that tri-party repo is a type of repo contract where the third entity will be a participant. Apart from whom? Apart from borrower and lender. That is called a dash. Acts as an intermediary between two parties to the repo to facilitate the services like your collateral selection, your payment and settlement, your custody and management during the life of the transaction. And the second filling the blanks question is the tri-party repo system was introduced by RBI in August dash. So two filling the blanks have been given. First is talking about what we call this third party in the tri-party repo. And the second is talking about when this tri-party repo function was or the instrument was introduced by RBI. So you have to answer out of A, B, C, D, which particular filling the blanks right option is correct here. A, B, C or D. Which of the following is correct? Okay, so the right answer for this particular question will be the tri-party agent in 2017. So RBI introduced your tri-party repo in 2017, and the third party is known as a tri-party agent. So right answer will be your A option. Okay, right answer is A. Okay, next. The next question is talking about the next instrument, that is LTRO. So LTRO is recently introduced instrument by Reserve Bank of India. First of all, it is a long-term repo operation. It is what? It is a long-term repo operation. It was introduced by RBI at the time of pandemic in February 2020. This was introduced. And the reason behind introducing long-term repo operation was because at the time of pandemic, there was certain sector who needed money, who needed capital, but they were not able to get the capital. And that's why LTRO, long-term repo operations, have been introduced. Okay, so first is saying to encourage banks to undertake maturity transformation smoothly and seamlessly so as to augment credit flow to productive sectors. Second, to assure banks about the availability of durable liquidity at reasonable cost relative to prevailing market condition. Third is both, and fourth is saying only A. So out of these, what do you think, which of the following is correct? Okay, so the right answer for this question will be both these statements are correct. LTRO, long-term repo operation, when we talk about both the statement for LTRO is correct here, because the first is talking about it encourages the banks to provide funding to the productive sector, and that we want banks to have durable liquidity at reasonable cost to prevailing the market condition. So the right answer will be both were the objectives behind introducing long-term repo operation. So right answer will be your C option. Okay. Next question we have is a commercial paper. Now we are talking about commercial paper. So a commercial paper is an unsecured money market instrument issued in the form of promissory note. What is commercial paper? Commercial paper is simply a unsecured instrument. Because it is issued by whom? It is issued by the corporates. So commercial papers are issued by corporates, because that's why it is known as the unsecured instrument of money market. The minimum credit rating shall be dash as per the rating symbol and definition prescribed by SEBI. Second statement is talking about here CPs can be issued for maturity between minimum of dash days and a maximum up to 1 year from the date of issue. The third is talking about the buyback offer can be made at a prevailing market price only, not before dash from the date of issue. So you have three filling the blanks here. Okay, so if you know any of these, you can eliminate one or two options here. So first of all, if you know the credit rating, Acha, what should be the credit rating of those corporates who are allowed to issue the commercial paper? So their credit rating is actually A3. Their credit rating is what? A3. It means you can eliminate the B option and C option, because the option number 4 is talking about none of the above. It means all the filling the blanks answer you have to remember to find out the right option. So second is saying the maturity is between minimum of dash days and maximum up to 1 year. So commercial paper and certificate of deposit, they both have a minimum 7 days duration, maximum 364 days. So here it will be 7 days. And now the corporates can buy back. Buyback means they can take back the commercial paper from the investor who have purchased it. And that will be done only after completing 30 days of issue. It means after, let's say company have issued the commercial paper today. So after today have been issued. Okay, so from tomorrow 30 days have to be there in which company is not allowed to take back the commercial paper. The commercial paper will remain in the market, but yes, after 30 days the company can purchase it back from their investor. So right answer is A3, 7 days, 30 days. It means A will be correct answer. Right answer is A. Okay, so do remember each and every concept and each and every term we are discussing here, as well as the explanation. Very important. Now the next question, the next instrument, that is talking about bill rediscounting scheme. So as I have told you, from every concept I will create one question and will take in this class. So do make sure you regularly joining these sessions. Let me know which of the following statement is correct here. Okay, so the first is talking about the minimum tenure of bill rediscounting scheme is 15 days and maximum is 90 days. Okay, second is saying the BRDS transaction is carried out on a discounted basis and has the following feature. First is calculated on actual 365 days basis. Next is saying C, both, and fourth is saying none of the above. So which of the following is true? So actually its duration is 15 days and 90 days. So this is the true. Another duration is correct. Now when we talk about the second statement, that's talking that the BRDS transaction is carried out on a discounted basis. This is true. And it will be having a following feature that says interest will be calculated on actual 365 days basis. It means both are the correct statement here. Which of the following is right? Both the statements are correct about BRDS. Okay, and under BRDS we use, the right answer will be C, both. Under BRDS we use a particular document, or we use a particular note here that we are going to discuss. UNDP, it is also a very important concept. Now the next question, next instrument, that is TLTRO. TLTRO stands for Targeted Long-Term Repo Operation. This question is totally a database question, you have to remember. So first is saying as part of TLTRO implementation, the RBI conducted auction of targeted term repo of up to 3 years, tenure of appropriate size for a total amount of up to dash crores at a floating rate. It linked to what? It linked to the policy repo rate. Next is talking about 4 tranches of TLTRO were auctioned by RBI, each with an auction amount of dash rupees, dash crores. And the next is saying on April 17th, RBI conducted its second phase for an amount of dash crores. So as we have discussed, RBI issued the LTRO for the purpose of raising capital from the market, or we can say providing funds to the banks by doing auction of repo on e-Kubay platform. And then that money bank will be sending to whom? Bank will be sending the same money to whom? To those sectors which RBI said to do so, like the productive sector we were talking about. Okay, so this is what the question is, the TLTRO about. Now if you remember the initial amount, initial means the total amount of what RBI said TLTRO will be issued, you will be able to answer this question. And the total amount is actually 1 lakh crore. So this is the right answer. Okay, the total amount of will be 1 lakh crore that can be provided in the market. Okay, second, the first 4 tranches of TLTRO that was introduced by RBI was 25,000 crore each, and the second phase was 50,000 crore. So right answer will be your A. So that's a database question. Do remember these type of question as well. Okay, next question. Next is talking about dash is a repurchase agreement entered into between eligible counterparties for borrowing and lending of funds on a collateralized basis. So what we're talking about, dash is what? Dash is a repurchase agreement. It's a repurchase agreement. Okay, and it entered into between eligible counterparties for the borrowing and lending of funds, and that will be done on the collateralized basis. I mean collateral will be taken to perform this transaction. So which instrument we are talking about? Repo, reverse repo, MSF, none of the above. So because it is a repurchase agreement, it can't be MSF. It can't be MSF. Okay, and you are saying you are doing borrowing and lending of funds on a collateralized basis. So the right answer will be your A, that is the repo rate. Right answer is your what? It's a repo rate. So A option will be correct. Okay. So you can see in each of your question we are discussing the different concept here. The next question is talking about, as we have discussed, the what is tri-party agent. The tri-party agent is the third entity that will be there in the repo transaction that we have discussed. Now the question is asking about right now, who are the third party agents right now? Because right now only 2 agents have been approved and only 2 agents are performing the tri-party repo transaction in India. So out of these 4, you have to answer which of the following is the tri-party agent. Is it CCIL, NSC, BSC, NSC, SPM, CIL, BSC, or none of the above? Let me know. A, B, C, or D. Which of the following is correct here? A, B, C, or D. Which of the following is correct here? And the right answer will be CCIL and NSC. Clearing Corporation of India Limited and National Stock Exchange. These are the 2 approved tri-party agents we have. So CCIL and NSC will be the right answer. Okay, your right answer will be A. Next question. Next question, we are talking about usance promissory note drawn by the discounting bank against the underlying bills. While rediscounting the bills, actual endorsement and delivery of these bills are not necessary. Okay, then instead this promissory note is delivered. Since this note derives its value from the underlying bills, this is called dash. So in the bill rediscounting scheme, BRDS scheme, what happens? Customer went to their bank and asked for an immediate cash of the trade bill. So first bank discount that trade bill of a customer. Now the first bank, discounting bank I can call it, the discounting bank wants liquidity now. So the discounting bank goes to the another bank and asks that bank to rediscount that particular trade bill of the discounting bill. So the rediscounting bank will be rediscounting well will be providing liquidity to the discounting bank here. So it means 2 banks will be involved and 1 customer will be involved who is providing the trade bill. In this situation, when bank, the customer, let's say I am taking loan or I have a trade bill and I am discounting that trade bill from the Punjab National Bank. So to Punjab National Bank as a security, I will be providing my trade bill. Okay, this is the transaction between a customer and the Punjab National Bank. Now the Punjab National Bank, let's say for example, needs capital. So PNB went to the SBI and asking for the rediscounting. So now SBI will need a proof of providing the credit to the Punjab National Bank. So now Punjab National Bank will issue a certain note to SBI that this is your note, you can take this note as a security. But now SBI is saying how I can believe that this particular note will be used for the legal transaction. Like in case if you fraud, in case Punjab National Bank fraud, how SBI is going to recover that money. So that's why what Punjab National Bank do, the Punjab National Bank draw the value of the particular note that will be given to SBI from the trade bill I have given to Punjab National Bank. So the note, the PNB issuing to SBI have its value derived from the trade bill I have given to Punjab National Bank. And that's why the note will have derivative in its name, because its value will be derived from the other bill. That's why the note will have a derivative in its name. So the right answer will be derivative usance promissory note. The right answer will be what? Derivative usance promissory note. Good evening everyone, welcome to the official YouTube channel of Officers Adda 24/7. So first of all, let me know how are you all, and also let me know is audio video both are okay, are we good to go? So as I have already informed you all that we have started the victory series in which we are going to discuss advanced questions based on your IFS syllabus, and this session is going on Monday to Saturday only on Officers Adda 24/7 in the evening at 7 PM. So how to join? Simply you have to subscribe the channel and every day at 7 p.m. you can join this particular channel from the you can join this particular session from Officers Adda 24/7 YouTube channel. And what we are going to do in this session, we have started this series with the module D, because module D have major part of your syllabus, a lot of content is there, and that's why maximum number of questions can be seen from the module D only. And that's why we have started with the module D. As you can see, this is our second class. And when we talk about Indian economy, Indian financial system, module D, so these are the units that we have to cover under the module D. Okay, financial market was the first class we have started in the series, and today we are going to start the money market questions. So the second class will be of your money market chapter. So who regulates the money market? RBI regulates the money market. Who regulates money market? RBI regulates money market. So it's a short-term market in which short-term financial assets will be used to raise capital for less than 1 year. And this short-term financial assets will be the close substitute of money. That's what we are having actually here in case of your money market. Okay, so money market have a lot of instrument, call money, notice money, term money, certificate of deposit is there, commercial papers are there. We also have repos, we have tri-party repo as well, we have treasury bills, we have cash management bill, etc. All these are the instruments of money market. That's what we have to study in this particular unit. So when we are going to study the money market, like, do make sure one thing is very much important. These YouTube sessions alone are not sufficient to clear your paper. What you have to do, you have to have the clarity of concepts in your mind and then practice the question. That's what is required to clear your paper. So do your conceptual study. Without conceptual study, not possible to clear the paper. So do focus on the conceptual study. So when we are going to study the money market or unit number 30 of module D in the paid classes or in the conceptual classes, we will start from what actually the money market is, what it does, what are the different instruments in the money market, and each and every instrument have to be discussed in detail by us. It means each and every instruments, how many days, like what is the minimum period, what is the maximum period for that instrument, why this instrument will be used, who issue this instrument, is it secure, is it unsecured, all these things we have to cover. Okay, so in case of money market, regulated by RBI, it's a short-term financial market which makes capable to the market participants to raise capital for short-term period that is less than 1 year. And to raise capital, we use call money, notice money, term money, treasury bills, commercial paper, certificate of deposit. Apart from that, we also have repos, tri-party repos, long-term repo operation, and targeted long-term repo operation. All these are the part of your fundraising instruments. Okay, so let's start with the first question here. And if you are joining this session for the first time, one more important information. As you all know, yesterday IIBF has given us the dates and the registration dates as well as the exam dates. So IE, IFS and PPB, they do not have gap between the paper. On 25th you have IE, IFS, on 26th you have your PPB paper. So we have to be very clear while we are studying or we are preparing for the JAIIB May 2024 paper that the syllabus should be covered or syllabus should be covered in such a manner that you will get 2 times to revise the whole syllabus. And for that, start early. And if you need help of any batches or paid courses, so the AIM batch is the batch which is the latest one on Officers Adda 24/7. This is the latest batch of ours, okay? And this batch is starting from 26th of February. From 26th of February, this batch is starting. If you want to enroll, use the code Y496, you will get maximum discount. That's the AIM batch, okay? So let's start with the first question. It is talking about the treasury bills. When it comes to the T-bills or treasury bills, it is the central government security. State government cannot issue treasury bill. Who issues treasury bills? Central government issues treasury bill. So which of the following is correct about treasury bill? First statement is saying they are money market instrument offered for the purpose of financing short-term debt obligation of the government of India. Second, there are 3 types of treasury bills, that is 91, 182, 364 days. okay, on the basis of competitive and non-competitive bidding process of auction, treasury bill can be utilized. Then the another statement is saying the investment in the bills may be made by any person who is resident in India, including state government, firms, companies, corporate bodies, institutions, trust and retail investors. Like all these can participate or can purchase or do the investment in the treasury bill. Third is saying NRIs, OCIs, FPI are eligible to invest in the treasury bill, but they are subject to approval of the government and provisions of FAMA Act 1999. So the first statement talking about what is treasury bill and what are the types of treasury bill. Second statement is talking about who can invest or who can participate in the treasury bill transaction. And the third one is talking about that NRI, OCIs, FPIs can also participate, but they have to take approval from the government as well as they have to be allowed according to the FAMA regulations. So you have to answer which of the following is correct about your treasury bills. A, B, C or D. Which of the following is right here? Okay. So the right answer for this particular question will be all of the above. All are the correct statement about treasury bill. All these statements are correct about treasury bill. So the right answer will be your all of the above, D option. Okay. Now the second question is talking about which of the following is correct about CD. Now what is CD? That's a certificate of deposit. So which of the following are correct about your certificate of deposit? So it is a negotiable money market instrument issued in dematerialized form. It means in electronic form by scheduled commercial bank and all India financial institution that have been permitted by RBI to raise short-term resources. Okay. Second is saying while their tenure of issue can range from 7 days to 1 year, most certificate of deposit are issued by bank for 3 months, 6 months and 12 months tenure. This is the most used, okay, or most issued, but the timing or the duration minimum will be 7 days, maximum 1 year. Next we have now, certificate of deposit can be issued to individuals other than the minor, corporations, companies, trust fund, association, etc. Fourth is saying NRIs are also permitted to subscribe to certificate of deposit. Fifth is saying the minimum amount of CD should be 5 lakh and thereafter it should be multiple of 5 lakh. Okay. Now, you have to answer out of these 5 statements which of the following is correct about certificate of deposit. So now, because certificate of deposits are issued by banks and financial institutions, that's why they are secured instrument. Okay, that's why they are what? They are secure instruments. So the right answer will be only 1, 2, 3, only 2 and 4, only 4 or all of the above. Which of the following you think is the right answer? Okay, so the right answer will be your all of the above. The right answer is your D. Okay, right answer will be your what? D. Next question. Filling the blanks question is it? It is. So first is saying the tri-party repo is a type of repo contract where a third entity, apart from the borrower and lender, there will be a third entity called a dash. Okay, and this entity act as an intermediary between the two parties to the repo to facilitate services like collateral selection, payment and settlement, custody and management during the life of the transaction. Okay. The next statement is saying the tri-party repo system was introduced by Reserve Bank of India in August dash. So tri-party repo transaction is simply a transaction where apart from borrower and lender, there will be one more party. Okay, that's the intermediary. And it can be the party who can become the tri-party repo transactions third party that will be decided by RBI and government. Then the party will be allowed to act as a mediator or intermediary. Okay, now you have to answer here which of the following is correct. So first of all, the party who becomes the third entity, okay, between borrower and lender, that is known as tri-party agent. So it cannot be your merchant agents. It is not tri-median. So it is what? It is a tri-party agent. So half answer can be A. But what about the year in which it was introduced? Is it 2017? So answer will be actually A. the party who become the third entity here, that is known as tri-party agent, and it was introduced by RBI in 2017 to make it more easy for the lender and borrower to have the trading. Because when there is a tri-party agent, this is the responsibility of the tri-party agent to decide the collateral security, like which security should be taken as a collateral, like collateral management, and all the other things will be taken care, like the custody, settlement, etc. will be done by whom? It will be done by tri-party agent, and that's why RBI introduced this in 2017. So the right answer to the question will be A option. Okay, right answer will be what? A. Okay, next question is talking about the LTRO, that is long-term repo operations, was introduced by RBI in February 2020 at the time of pandemic. Which of the following are the objective of LTRO? Why RBI have introduced LTRO in the year 2020, or I can say at the time we were facing, or the world was facing, the pandemic? What was the reason out of these? So first is saying to encourage banks to undertake maturity transformation smoothly and seamlessly so as to augment credit flow to productive sectors. Second is saying to assure banks about the availability of durable liquidity at reasonable cost relative to the prevailing market conditions. Third is saying both. Fourth is saying only A. So why RBI have introduced LTRO? What is the reason behind introducing LTRO? So when it comes to the long-term repo operations, it was introduced by RBI because RBI have seen at the time of pandemic, the productive sectors were not getting the sufficient capital. They were not getting the sufficient money. And that's why, money means the credit. That's why RBI introduced this. And also to assure banks about the availability of durable liquidity, and that will be at a reasonable cost. Okay, and right answer will be both. Both are the reasons, or both are the objectives behind introducing LTRO by Reserve Bank of India. Okay, so RBI wanted to make sure that all the productive sectors will get the sufficient liquidity or the sufficient credit which they need. Okay, that's why LTRO was introduced. Now the next thing also was introduced, that in case of LTRO, long-term repo operation, it is very much important for us to make sure that the assets, or not the assets, but we can say the loan should be available by the banks at a reasonable cost, so that they will be providing funding to the productive sectors. And that's why repo operations have been introduced by RBI in a pandemic. So right answer is both. Both are the objectives. Now, a commercial paper, that's the another instrument of money market. It is unsecured. Why it is unsecured? Because it is issued by corporates. Corporates can issue the commercial paper. So a commercial paper is an unsecured money market instrument issued in the form of promissory note. The minimum credit rating shall be dash as per rating symbol and definition prescribed by SEBI. So what we are talking about here, corporates issues the commercial paper, and that's why they are unsecured, because it's a risk. But not all the corporates can issue the commercial paper. There should be a dedicated rating criteria. Accordingly, the corporate will be allowed to issue the commercial paper. So commercial paper can be issued for maturity between minimum of dash days and a maximum of 1 year from the date of issue. Next is saying the buyback offer can be made at prevailing market price only, not before dash days from the date of issue. Now, you have to answer which of the following is correct. And if you remember what kind of rating is required, you can eliminate the two options here. The rating is A3, A2 or BBB, or none of the above. So actual answer is rating is A3. Okay, rating is what? It is A3. Now, for the minimum maturity of the commercial paper, we have 7 days. So rating is required A3, minimum duration for the commercial paper is 7 days. And after how many days the buyback option is available? After 30 days. It means the right answer will be your A. After 30 days, it is allowed to the corporate that you can take a buyback from the market. Like let's say, for example, if people want to sell your security after a certain period, so you can take back that security from the market, but when? After 30 days completed of your date of issue. So the right answer will be your A option. Rating is A3 required, minimum days are 7, and you can be you will be allowed to buy back the certificate. You are allowed to buy back the commercial paper after the 30 days from the date of issue of commercial papers. Okay, so right answer is A. I don't know why I keep saying certificate of deposit in place of commercial paper, but yeah, we were talking about commercial paper there. Okay, acha, the minimum amount in the commercial paper is same as the certificate of deposit, that is 5 lakh, and thereafter multiple of 5 lakh. Now, which of the following is that true about the bill rediscounting scheme, that is BRDS? Which of the following is that true about bill rediscounting scheme? That we can say it is a BRDS. So the minimum tenure of BRDS transaction is 15 days and the maximum is 90 days. The BRDS transaction is carried out on a discount basis and has the following feature, like first is interest is calculated on the actual or 365 days basis. Third is saying both, fourth is saying none of the above. So what do you think? Which statement is correct or true about the bill rediscounting scheme? So bill rediscounting scheme was introduced by RBI to make sure that the proper liquidity will be available in the market and also to promote the bill culture in the economy. That's why RBI has introduced BRDS scheme. And the right answer will be both. Both the statements are correct when it comes to the BRDS scheme. Okay, both the statements are correct. So right answer will be your C. Clear? Next question. As part of TLTRO, targeted long-term repo operation implementation, RBI conducted auction of targeted term repos up to 3 years. That's the maximum duration, and the minimum is 1 year duration for the auction purpose. Of appropriate sizes for a total amount of dash up to what amount? Dash crores at a floating rate linked to the policy repo rate. Okay. So we have to answer here what is the actual amount that will be allowed here. What is the actual amount? Is it 1 lakh crores, 2 lakh crores, 5 lakh crores, 1.5 lakh crores? Now you can, if you remember this amount, the total amount, you can easily eliminate the other option and you do not even have to read the other part of the question. You can simply answer by the one answer. You can simply answer by finding out the true amount of the first filling the blanks. Okay, so second filling the blanks is talking about 4 tranches of TLTRO or auction by RBI, each with an auction amount of dash crores. On April 17, RBI conducted TLTRO 2.0 for an amount of dash crores. So they are asking about amount, and the right answer is actually A, because the total amount is 1 lakh crores and the 4 tranches happen of 25,000 crores and TLTRO 2.0 was issued for the amount of 50,000 crores. Okay, so do remember this amount, very important, and this is latest at the time of pandemic this have been done. So this is an important question. Okay, do remember these amounts. So right answer will be your A option. Next question we have here, that is talking about dash is a repurchase agreement entered into between eligible counterparties for borrowing and lending of funds on a collateralized basis. So we are talking about dash is a repurchase agreement, okay, which is entered into between eligible counterparties. For what purpose? For borrowing and lending of funds. On what? On the collateralized basis. So is it a repo? Is it a reverse repo? Is it a MSF? Is it none of the above? A, B, C or D? Which of the following is correct? A, B, C or D? Okay, so dash is a repurchase agreement entered into between eligible counterparties for borrowing and lending of funds, and that lending will be done on the collateralized basis, and the right answer will be your repo. If it's a repurchase agreement, that's a repo agreement. So right answer will be here A, repo. Next, dash are the 2 approved tri-party agents. So in the tri-party repo transaction, there is an agent, and that agent will be decided by government and RBI, as I have told you earlier also. So you have to answer right now which of these are the eligible tri-party agents. First is saying CCIL NSC, second is saying BSc NSC, third is saying SPM CIL BSc, and fourth is saying none of the above. So if we talk about SPM CIL, it is what? It is actually a Security Printing and Minting Corporation of India Limited. It's a corporation of Government of India which covers R4 press, R4 mint and 1 paper mill. All 9 units will be under the SPM CIL. All the security papers of Government of India and Post Office etc. will be prepared here under the supervision of SPM CIL. So it is not true. Bombay Stock Exchange, National Stock Exchange, both are not the tri-party agents. And the right answer is Clearing Corporation of India Limited. That's a clearing corporation of Government of India, and National Stock Exchange. These are the 2 approved tri-party agents. So your right answer will be A option. Okay. Right answer is A. Next question. Usance promissory note drawn by discounting bank against the underlying bills, where rediscounting the bills, actual endorsement and delivery of these bills are not necessary. So you are actually, let's say first the bank have discounted the bill of a client. Now the bank went to the other bank or financial institution to rediscount that bill from them. And in that situation, whatever bills you are giving as a security, that you do not have to endorse or transfer to the rediscounting bank. Okay. So instead this promissory note is delivered. Okay, since this note drives its value from the underlying bills, this is called dash. This is called dash. Which of the following is correct? A, B, C or D? BRDS, DUPN or BRDS again. First is saying bill rediscount scheme, third is saying bonds rediscounting scheme. So you have to answer which of the following is correct. A, B, C or D? Okay. So the right answer here is actually this scheme is known as your BRDS. Bill rediscounting scheme. The scheme named as what? It is named as a bill rediscounting scheme. Okay, but the question is asking about the bill because its value will be derived from the underlying bills, and this bill is known as what? Okay, so this note is known as what? It is known as the derivative usance promissory note because its value is derived from the other usance bills, and that's why the note will be known as a derivative usance promissory note, and this note will be traded in which scheme? That is bill rediscounting scheme.